Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. President Emmanuel Macron starts the search for a new prime minister as the French government collapses, plunging EU's second largest economy into turmoil. Bitcoin surges past $100,000 for the first time as President-elect Donald Trump picks crypto proponent Paul Atkins for the US Securities and Exchange Commission. Plus, South Korea's defense minister is replaced as the opposition ramps up pressure on the president over this week's chaotic imposition of martial law. Happy Thursday. Bitcoin is the asset in focus right now, the asset of choice, and we'll unpack that story for you. European futures currently pointing to losses of 0.1%. The context is European stocks are actually up 5 straight days. French stocks as well, looking past the political uncertainty emanating out of Paris. European stocks have been supported today, possibly looking for a bit of a breather, pointing lower by 0.1%. FTSE 100 futures pointing lower by 0.2%, just shy of 0.2 here in the UK. S&P futures punching through a 56th record high once again for the year yesterday, driven by the Magnificent Seven. Gains coming through from likes of Nvidia and others within the big tech space stateside. S&P futures currently flat after the gains of yesterday. Nasdaq 100 futures also looking a little softer, just down 0.1%, again after rallying a little over 1% yesterday. Let's flip the board and look cross-asset because, yes, what a momentous day then for Bitcoin. 102,000 historic for this cryptocurrency and the broader ecosystem pushing through that key marker for the first time on record above $100,000 on the SEC pick by incoming President Donald Trump. Euro dollar at 105. We monitor that, of course, for weakness linked to the politics of France, but currently the single currency up just shy of 0.2%. The cost speed continues to be in focus, of course, for us. South Korean equities as politicians work their way through impeachment proposals against the president on the back of that surprise and shock around martial law. Currently, the cost speed, the benchmark over in South Korea, down 0.8% so far in the session. And we focus as well on the 10-year in the US, 4.18 right now, largely unchanged. Jay Powell saying that the US economy is in remarkably good shape and that officials can be cautious in terms of the next steps on interest rates. Non-farm payrolls dropping, of course, tomorrow. Let's get to France then. Emmanuel Macron is looking for a new prime minister after the far right and the left united in France to push through a no-confidence motion against the government. The French president needs a premier who can pass next year's budget through a deeply divided parliament.
I'm not calling for Emmanuel Macron to resign. I'm saying that there will come a time when, if we don't take the path of respect for the voters and respect for the political forces and respect for the elections, that the pressure on the president will obviously get more intense. But he alone will have the decision, the last word.
Let's get more from Bloomberg anchor Kriti Gupta, who is on the ground for us in Paris. Kriti, what a momentous few hours, I should say. Overnight, of course, towards the end of the day yesterday in Paris. What is next then for Emmanuel Macron? Where does he go from here?
Well, Tom, I've never learned more about the French Constitution than I have in the last 24 hours because we are in uncharted territory and there is a way out, but it gets a little bit tricky. And as you just heard from Marine Le Pen herself in that interview, she's not calling for the resignation of Emmanuel Macron, but the far left absolutely is. So that is certainly on the table. It only adds to the pressure to the French president to really find a caretaker prime minister. That could be Michel Barnier if he's chosen to kind of hold on to the reins. It's a playbook that he had used previously with Gabriel Attal, one of his kind of favorites within the centrist party as well, to kind of hold on to the public finances, to hold on to the job until he figures out his next step. There are a couple of other candidates, though. We'll get to that in a moment. But basically, as we find the caretaker prime minister, whoever that may be, it is likely that this French government will have to use what they call a special law, a loi spéciale, basically bringing over the 2024 budget into 2025. And what that means is that in the first couple of months of next year, you could actually see even more austerity austerity than some of the measures that Michel Barnier was proposing, just given the constraints that come 12 months after this 2024 budget was passed. That includes things like defense, taxes, inflation, all of that likely to affect French citizens.
Yeah, there's certainly an irony in that, isn't there, given the opposition from the left and the right to this budget, that maybe you even get more austerity next year as a result of this impasse. Who is on the list then as potential next prime ministers that Macron could reach out to?
Well, France has a habit or a tradition of bringing back figures from the past, and that's where certain former prime ministers could retake the role potentially. Certain candidates that's come to mind. Bernard Cazeneuve is one of the key names that keep coming up. He was one that was that name was floated quite aggressively when Michel Barnier was first being considered. Of course, Michel Barnier did get the job. There's a couple of others, including the current Minister of Armed Forces, the Defense Secretary in essence, as well as Jean Castex, who is also a former prime minister, as well as a major other centrist leader as well. There are basically several candidates, but I think what you need to know is Emmanuel Macron is trying to show stability. He's trying to show that whoever is going to take on this role has done the job before and can do it again. And that's why some of these names are being circulated.
Chrissy, how is the market reacting to all of this uncertainty? I pointed out that equities in France seem to be relatively resilient, at least at this point. What's your take in terms of the market reaction to this? Maybe the focus should be on sovereign debt in France.
Yeah, well, I think the storm is beneath the surface in this scenario, because yesterday, if you looked at the French market, it actually closed much higher. You saw green on the screen in the French equity market, but where you saw the underperformance, I think this is crucial because equities around the world rallied yesterday, but French stocks still underperformed relative to their international peers, and that's where you see the stress. If you look at the banking stocks, if you look at French bonds, if you look at even some of the debt, the corporate debt of French banks, that's where you're seeing the underperformance. There is a fabulous Goldman index that really talks about this and shows just how much pressure they're facing because, of course, in the equity market, French banks and specifically have taken a major hit because of their exposure to French bonds. That's actually showing up in the corporate bonds of the French banks as well. The debt of the likes of Suk-Yeol, for example, or Crédit Agricole, among many others. BNP Paribas, of course, top of mind as well. So that's where it's showing up. The euro also continuing to underperform. That we're waiting for on the German side as well. You can see the premium staying elevated. It's not closing at the moment. So those are kind of the early signs of stress. But Tom, what I'm hearing from investors here in Paris is that this is likely to be a story that is slow, that is steady, and that really lasts into 2027. So the pain could be quite elongated.
OK, slow, steady pain for France and French assets into 2025. Kriti Gupta, opening trade anchor on the ground for us in Paris with the latest and the analysis. Let's do a bit more of a deep dive in terms of the French asset reaction then. We start with euro-dollar. Given what Kriti was saying, pressure, of course, on the single currency. Seeing a bit of a gain so far in the session, up 0.1%, but that's largely reflecting dollar softness. And that can probably be tied to the commentary from Jay Powell on the view that this is a remarkably well-performing US economy, that the door remains open, it seems. The takeaway seems to be for many traders the door remains open to a cut in December from the Fed, another cut. Euro-dollar then at 105, currently up just shy of 0.2%. Here's the futures then picture for French equities that, again, for 5 straight days have actually posted gains. The context is, of course, you've seen pretty significant underperformance French stocks versus their European counterparts, particularly since June when Macron decided to dissolve Parliament and throw in that political curveball. Year to date, French stocks are down about 3%. Called higher, though, in the session today. OAT futures then, in terms of the sovereign debt of France, not a huge amount of movement, but it's the spread, of course, that Kriti was referencing that remains in focus. Currently, at the end of the close yesterday, the 10-year over in France was yielding just shy of 2.90 versus German counterparts of 2.06. So a spread there of around 83 basis points. Some have suggested you could get above 100 basis points, depending on how this plays out. And, of course, it was about a week ago that the yields on the French 10-year topped the yield over in Greece. So we keep an eye, of course, on how French assets are reacting to the news out of Paris. Now, Michel Barnier, appointed in September, will become the shortest-serving Prime Minister in France's modern republic. Debating ahead of the no-confidence vote, Barnier told lawmakers it had been an honour to serve France with dignity.
I was and am proud to act to build rather than destroy, and that during this period I listened to all those who told me they were willing to work for the good of the country. Honorable members of Parliament, I cannot accept the idea that institutional destabilization could be the objective that would unite a majority of MPs here.
Michel Barnier, the outgoing Premier in France, speaking in the National Assembly yesterday. At this point, let's bring in Douglas Yates, a professor at the American Graduate School in Paris. Douglas, thanks for your time this morning. Momentous few hours, of course, and few days in France. The ball seems to be back in Macron's court. What is his reaction? What are the next steps from this French president?
Well, I mean, it's very difficult to think about how Macron is going to react, because it's difficult to know whether or not he's a super genius and he's orchestrated this predictable crisis, or if he's making a series of errors and he's an isolated president in the Élysée Palace. So I'm going to go with the first option, that he's a genius, he knew this would happen, and he's counting on the French Constitution, which gives a president real powers to enable him to continue with a budget of austerity and to leave his main opposition, which is Marine Le Pen and the Rassemblement National, powerless in the parliament.
Douglas, that's pretty fascinating. And so potentially then the political cost. Would this be a play by Macron then to land this at the door of Marine Le Pen, additional austerity, more austerity arguably than you may have got if the budget had actually passed? He can lay that at her feet and the feet of the socialists and the far left, and maybe they will pay a political price. Is that potentially one of the gambits that Macron is playing here?
Yeah, so if he's a genius and not an isolated idiot who's unaware of French problems, he's playing a long game for the presidential elections. Marine Le Pen has promised the next time there's an election in France, the Rassemblement National will win, and she's got very clear presidential ambitions. So if he's playing that long game, I think it could be seen in his interest to have the extreme right and the extreme left in bed together, because politics makes strange bedfellows, and this motion of censure required the cooperation of two bitter enemies. That's a marriage of convenience between the extreme left under Jean-Luc Mélenchon and the extreme right under Marine Le Pen, and it's a marriage of convenience that can't hold up. That is, as they get closer to the presidential elections, Mélenchon and Le Pen will have to disassociate from each other. And in the meantime, I think Macron counts on his ability to carry on current affairs, to not have any real big ambitions for government now that the Olympics are over, now that the Notre Dame Cathedral has been restored. He's got no real ambitions, portfolio ambitions. He can do foreign policy without parliament, and playing on de Gaulle's Fifth Republic Constitution, he can do his job and leave parliament in chaos.
And Professor, to be clear, you think he survives this and he sees out his term into 2027?
Absolutely. The left will ask him to resign. He'll just ignore it. He doesn't have to resign. When we look at, say, de Gaulle, who called referendums and finally lost a referendum in 1969, de Gaulle resigned, but that was a different era. And I think that the French presidents have learned that you play the ball right to the line, and he doesn't have to resign, and so he won't. I think he sees the power of the French president as autonomous from parliamentary chaos. Even if his gamble was mistaken and he lost his majority in parliament, as long as he can call 49.3 this article in the French Constitution, and as long as he can use Article 45 and Article 50 of the Constitution, and if he has to, Article 16, he can run government without a majority in Parliament.
OK, Douglas Yates, professor at the American Graduate School in Paris. Macron survives this and potentially even benefits from it, with maybe some of the pain around austerity next year being directed at his opponents in the National Assembly. We'll see if that is how things pass out, of course, and plan out for the politics of France. Thank you for the analysis. Coming up, Bitcoin tops $100,000 as Donald Trump makes his pick to lead the US Securities and Exchange Commission, the SEC. More details on a momentous moment of for the crypto space. That's coming up next. This is Bloomberg.
People use Bitcoin as a speculative asset, right? It's like gold. It's just like gold, only it's virtual. It's digital. People are not using it as a form of payment or as a store of value. It's highly volatile. It's not a competitor for the dollar. It's really a competitor for gold.
That was, of course, Jerome Powell, Fed chair, speaking at the New York Times Dealbook Summit on Bitcoin, should be being compared to gold versus a competitor to the US dollar. Bitcoin, of course, touching 100,000, breaking through 100,000 for the first time ever. Currently at 101,976, just shy of 102,000 US dollars per coin. Getting a boost, of course, from Donald Trump's pick to lead the US Securities and Exchange Commission. Joining me now is our Markets Live executive editor, Mark Cudmore. Mark, the naysayers around the crypto space, around Bitcoin, well, they have been firmly sidelined. This is historic for the crypto space. What undoes the story for Bitcoin at this point?
I don't think anything undoes it anytime soon, and I don't see any reason to be particularly bearish right now or be necessarily extra bullish. Obviously, we got a boost from the SEC appointment. We've now broken that $100,000 level, which I think people were driving for. But I think it's hard to have a short-term call. I think Bitcoin over the next year is looking pretty positive given the US administration's plans to potentially accumulate Bitcoin and the fact that they're kind of pro-Bitcoin projects. They're going to encourage more institutions to get involved. What derails it? I mean, longer term, this is an asset which isn't constructed to have stable equilibrium at high levels. It is a gambling asset, so it's constructed to have momentum swings. In the future, it'll have another 70% drawdown. That doesn't mean it'll be the end of it. It might go to 150K. It might then fall back to like 50K or something like that, and then rebound again to new fresh highs. The point is, it is an asset that the way it's constructed, because there always needs to be another marginal buyer for the constant increase in supply, that it cannot have equilibrium at high levels. So as soon as it stabilizes at high levels, the gambling incentive disappears and it encourages whales to cash out. So all we really know is that volatility will be in the future, but woe betide anyone who wants to be aggressively bearish in that point of view.
Yeah, constructed then for those swings. And we'll look to see, of course, if any of those whales do cash out in the hours ahead, given the marker that it's just crossed. Mark, on the Fed, and of course it partly is tied to expectations around rates as well, to some extent, but as you say, more to do with the SEC pick. But on the Fed, we of course heard from Jay Powell talking again about the strength of the US economy, saying officials can be cautious. In terms of what the reaction function across the years, I mean, we've seen yields go on the 10-year from 450 to about 420 right now, 418 in fact. So money has been moving in to the 10-year. What is your take in terms of where this leaves us, market expectations around the next steps for the Fed?
So I think the rally in treasuries this time of year it makes sense, and I think treasuries will do okay until the new year. I do think that unless the US economy crumbles, I think US 10-year yields will go a chunk higher. At any point, if recession is upon us, that changes the game. I don't think there's any point kind of front-running that recession. As long as the government is pumping so much money into the economy, it is pretty hard to have a recession without a complete collapse in the private sector. Now, that can happen, but we'll be aware when it's happening because there's a crisis. So what you've got to look at for a kind of a sustained rally in treasuries, you've got to look for a proper banking crisis or private sector crisis, or you've got to look for a major retrenchment of the government, which might come with Trump's Department of Government Efficiency if they really fire loads of employees, cut back on spending very aggressively, more than the tax cuts could happen, or if you just see a general kind of slowdown in growth, which will probably come from a crack in the labour market. But that's pretty hard that latter point's pretty hard to come in isolation unless the government does pull back on spending.
OK, so at least in the medium to long term, yields probably higher for the US unless those things come together. Markets Live Executive Editor Mark Cudmore, thank you very much indeed. On, of course, Bitcoin and what we've been hearing from Jay Powell. Let's cross over right now to Avril Hong, staying by in Singapore for a check on the Asian markets. Avril.
Yeah, Tom, we're seeing a mixed bag in this part of the world. Japan, Taiwan stocks paring gains from earlier. Initially, though, they were riding the tailwind from Wall Street as Powell spoke about the positive outlook, the bullish outlook for the U.S. economy. We're seeing China and South Korea continued underperformance today. The Korean won is on the back foot amid the political uncertainty in the country. But what I really want to talk about is what we're seeing in dollar yen. Flip the board. Take a look at how the pair has been faring. We have seen it rising in the past day amid local media reports that seem to muddy the waters on a BOJ rate hike the week after next. But it seems like we're back in the game again because a BOJ board member seen as the most dovish of the lot, Nakamura, in the past hour or so has been speaking to media saying that, hey, he's not objecting a rate hike. It's really dependent on the data. There's no decision that's been made about December. It's dependent on the data. So it looks like a December move from the central bank in Japan is back on the table, and we're seeing the dollar yen move. Tom?
OK, yeah, volatility around whether or not the BOJ will actually go again with another hike later this month. Avril Hong in Singapore, thank you. We continue, of course, to keep an eye on the equity story, the stock story over in Korea, where the Kospi is currently down 0.9%. So another down day for Korean stocks on the back of the political uncertainty in that nation. There is some lines breaking as well on South Korea, which will bring you, we keep across that story for you, of course. European futures currently pointing lower by 0.2%. This is Bloomberg. South Korean President Yoon Suk-Yeol is reportedly set to face an impeachment vote on Saturday after the fallout from his martial law debacle. Let's bring in Asia economics reporter Katia Dmitrieva. Katia, what is the latest?
Well, the latest is an exclusive interview with Sherry On. We had the leader of the opposition, the main opposition party, actually telling us that it will be a bit more difficult to impeach Yoon. Now, of course, they filed a motion to have Yoon impeached probably at the earliest by Saturday evening. But as soon as he made those comments in that interview about it being difficult, that's where we saw the Kospi start to slide on those comments. And the reality is that it really is a numbers game. So they need 200 of the 300 members to vote in favor of impeachment. However, previously, where there was some thinking that perhaps some of Yoon's own party might vote in favor, the leader of that group, of his PPP party, has said, actually, we're going to be going against that motion. We're not interested in voting our own leader out. And so the next 24 to 48 hours, the big question is, how will they vote? Because they need an additional 8 members of Yoon's party to vote in favor of impeachment. And meanwhile, we have the Bank of Korea, we have the finance minister, all making comments to sort of calm the markets down.
OK, Asia economics reporter Katia Dmitrieva, thank you very much. As we say, we have been, as Katia was pointing out, we've been speaking to the opposition leader in South Korea. We'll be bringing that interview to you, of course, throughout this morning. And that interview moving assets. The Korean Kospi benchmark is currently down 0.9%. Coming up, the French government plunges deeper into crisis. Yeah, it's political challenges left, right and centre. We're going to take a look at how markets are reacting to the turmoil in France. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. These are the stories that set your agenda. President Emmanuel Macron starts the search for a new prime minister as the French government collapses, plunging the EU's second largest economy into turmoil. Bitcoin surges past $100,000 for the first time as President-elect Donald Trump pricks crypto proponent Paul Atkins for the US Securities and Exchange Commission. Plus, South Korea's defense minister is replaced as the opposition ramps up pressure on the president over this week's chaotic imposition of martial law. European futures pointing lower after 5 straight days of gains. European stocks largely, it seems, looking through the political challenges of France. European futures pointing lower by 0.2%. Though maybe some profit taken today after 5 straight days of gains, and we'll see how that story unfolds, of course, at the open, 8 a.m. UK time. FTSE 100 futures pointing low by 0.2%. S&P futures currently flat after a 56th record gain for the S&P yesterday, driven largely by a story around mega-cap tech and the gains there with Nvidia front and centre. Nasdaq 100 futures pointing low by 0.1% again after rallying around 1% for the Nasdaq 100 by the end of the close yesterday. Let's flip the board and have a look across assets. Korean equities, Korean assets still in focus for us, as is Bitcoin, of course. An historic moment as Bitcoin breaks through that $100,000 per coin level. And you've had $1.3 trillion of market cap expansion for the crypto market just since November the 5th and the election of President Trump. 101 currently, 101,000 for Bitcoin, up 4% so far in the session. Euro dollar at 105. Bit of gains coming through, up 0.1%, largely down to dollar softness. We keep an eye on euro, of course, linking that to the French politics. Kospi over in Korea dropping now at 0.9%, down almost 1% after the pressure that's come through for Korean equities in the last few days on the political chaos in that country as well. And the US 10-year at 4.18. Jay Powell says the US economy is in remarkably good health. Officials can be cautious in the next steps. 4.18 on the US 10-year. To France right now. Emmanuel Macron is looking for that new prime minister after the far right and left united in France to push through a no-confidence motion against the government. Let's get more from Bloomberg anchor Kriti Gupta on the ground for us in Paris. Kriti, where does this leave the French budget?
In a very precarious situation, Tom, because the likelihood is that basically Emmanuel Macron, with his caretaker prime minister, whoever that may be, will have to pass a loi spéciale, basically a special law that brings over the 2024 budget into the first couple of months of 2025. Now, that all sounds very simple, but what that actually means in practice is that French citizens may have to have higher tax burdens. They may have contributions that are linked to 2024 inflation as opposed to 2025 numbers, things like that, where some of the constraints or some of the extra perks or cushions built into the 2024 budget based on economic data, say 12 months ago, would fold over into 2025. But Tom, you and I are no stranger to the fact that inflation has largely changed in the last 12 months. The yield story has lastly changed, as has affordability around the world. So that's going to affect things like taxes, electricity costs, drug reimbursements, and then, of course, at the end of the day, how much people are able to access when it comes to their pension accounts. That, of course, a key sticking point in French politics.
OK, Bloomberg opening trade anchor Kriti Gupta on the prospects of a budget being passed. Seems pretty slim, at least in the near term in Paris. Thank you, of course, joining us on the ground in Paris. Let's bring in some more expertise now with a particular lens on the markets of France and Europe. Benedicte Lowe, equity and derivatives strategist at BNP Paribas Markets 360, joining us bright and early in the studio. Benedicte, thanks for coming into the studio this Thursday morning. Let's start with France then. French equities clearly have underperformed their European counterparts. We've seen some gains in the last 5 days, but broadly in the last 6 months, the underperformance has been pretty pronounced when it comes to French stocks. Does that underperformance now continue into next year?
Yeah, so what we've seen this year is actually the CAC index is one of the only index globally that is down, and it's also the biggest underperformance versus the DAX since the 1990s. It's a really massive underperformance priced into the CAC. Now, we've seen since the end of November, there's been a bit of change in sentiment in Europe as a whole, but also in the CAC, and we've seen Europe starting to rally. And we think there's actually more room to come for a rally in European stocks into year end, but also into next year. Now, the question for CAC and for the European and for French stock as a whole is a question whether sentiment is going to improve on the region, but also we've seen just on the CAC index per se. It's a bit of a mixed bag, what's happening in France. Yes, you have lack of visibility into next year, what is going to happen in terms of the budget. But also it means the tax increase that were discussed in the previous budget, the one just a few days ago, those are voids. So it means a bit more breathing space also for a company. So quite mixed bag with a big underperformance that leaves the room for some upside for
That's
stocks.
really interesting. So it's the lack of that additional tax increase. Is that a key reason why French equities have actually been performing relatively well in the last 5 days?
I would say it is part of that. There's also the fact that at some point there's too much pessimism that is pricing into a region as a whole. We've seen underperformance on the back of geopolitical move, the Trump election, and the back of a number of catalysts that have not performed, that have not been a tailwind for Europe. And at some point there's just too much pessimism. It's trading at huge discount versus a US equity. When you look at the spread between PE ratio in the US and in Europe, you see really huge discount in Europe. At some point, the European region just become a good buy.
OK, so the European region is a good buy. Too much pessimism has been priced in. You say there has been that sentiment shift when it comes to European stocks. How confident are you that that will be sustained into 2025?
So there's a few things coming up for 2025. First of all, ahead of the inauguration of Trump, there's a typical pattern post the US election when there's a rally in US equity, but also in the rest of the world equity. European equity tends to perform well in that period. Now, we haven't seen really that after the US election. We're seeing that just the last few days. So there's more room to come on the back of that. And then for the case for 2025, well, we've got a lot of negative news that is already priced in terms of tariff. We see the headlines. We've seen the underperformance on the back of that. We've seen also underperformance on the back of geopolitical risks. So if that was to fade or decrease next year, that would be a potential positive catalyst. Also, the German election, if we do get a center-right type of coalition, that could also be positive for stocks. And then finally, we've got central bank divergence, where the ECB is set to continue to cut rates. And that should provide some more tailwinds for the European economy, especially given the fact that the Eurozone is quite sensitive to rates. So they should provide more tailwind for the Eurozone than for other regions.
OK, so this is the bull case. This is the bull case for Europe, which is, you know, to some extent a little counterintuitive given what we're seeing in terms of the politics. But you lay out the rationale there for why you could see some further gains for European stocks. And clearly the cheapness, the relative value of European stocks is a factor, along with the ECB. Talk to us about Germany then. That was one of the factors. There's an election coming up, of course, in February. What is the thinking around an opportunity linked to the German election and why that could be a catalyst?
Yeah, so we've seen really a vacuum in terms of the political leadership into Europe. And we think if we get the result of the election that is quite center-right, where they have a bit more deregulation, where they don't increase taxes and all, we think that could provide, and they also kind of release a bit on the tax, on the debt, some kind of a bit more fiscal spending. That could be positive and kind of signal strong positive change in the Eurozone. And we think that could lead to an outperformance and kind of a change of sentiment in Europe that has really been lagging. It's the unloved, unowned region in the world, and that could change into 2025.
To what extent will Europe and European corporates be relying on a comeback from China in 2025 as a driver?
Yeah, so that has been one of the things where we would have expected some tailwind to come out of China. This has not happened at the moment. The first market reaction was faded quite quickly. But now we need to wait for Chinese consumers to see increase in their own balance sheets to kind of help more in terms of the consumer spending. And that could feed through into Europe next year as the confidence in the Chinese consumer increases.
What is your sector preference then? You're making the case for the bull case for Europe next year. Where does that lead you in terms of a sector preference or a regional preference in terms of where you would lean?
Yeah. So our view is overall positive sentiment on Europe for next year. Some of the sector that we really like is the tech sector. We have seen a derating in that sectors. So still we see structural positive tailwind for that sectors. And another one that we still like is the travel and leisure. So there's really good seasonality into year end. We've seen good performance, but still more to come. It's one of the sectors that tends to perform really well after the Fed rates cut when we look at past cycle. So some tailwind coming from those sectors, but overall shift in sentiment should be a positive beta on European stocks.
I want to listen into what Christine Lagarde has been saying recently, speaking yesterday. We can listen in now to the head of the ECB commenting on the health and the challenges of this Eurozone economy. Let's take a listen and then I'll get your reaction.
Survey-based data suggests that growth will be weaker in the short term on the back of slowing growth in the services sector and a continued contraction in manufacturing. Further ahead, the euro area's economic recovery should start to gather some steam. Consumer spending is expected to pick up as real incomes rise, and investment is expected to recover as the impact of past monetary policy begins fading.
So I think those comments from Christine Lagarde of the ECB align to some extent with the theory that you're setting out for Europe next year. What assumptions are you making about how far the ECB goes in terms of rate cuts?
Yeah, we think that the story is very different from the US, from the Europe. We think the rates cut story in the US is one where we're approaching neutral rates, whereas in the ECB, in the Eurozone region, we think there's more room for the ECB to cut, and that should provide more tailwind. And if we're coming back to the comments that she made, yes, there's this growth differential with the US, but it's already, we think, partially to an extent in the price. We've seen massive underperformance this year of around 20%, 30% if you take the case of the CAC. So at some point, too much pessimism is priced into the equity markets.
Benedicte, thank you very much indeed. Great to have you in the studio. On the bull case for Europe, Benedicte Lowe, equity and derivatives strategist at BNP Paribas Markets 360. Now, some other stories making the news this Thursday. Brian Thompson, the CEO of United Health Group, has been fatally shot in Midtown Manhattan in what authorities described as a targeted attack, igniting a manhunt across the city for the gunman. Early reports suggest the alleged attacker was waiting for Thompson upon his arrival at a hotel for the company's Investor Day. The attacker approached the executive from behind and shot him multiple times before his gun malfunctioned. President-elect Donald Trump has chosen Gail Slater to head up antitrust enforcement at the US Justice Department. Oxford-educated Slater was a tech policy advisor on the National Economic Council during Trump's first term. She's seen as a pro-enforcement, populist Republican, particularly when it comes to the tech sector. And Amundi is said to be interested in acquiring control of Allianz Global Investors as deal-making heats up in Europe's asset management industry. Sources tell Bloomberg Amundi has been holding on and off talks with the German insurance giant for several months. Possible structures could include a full acquisition by Amundi or a combination, leaving Allianz with a sizable stake. Coming up, how can AI help drive the adoption of nuclear energy? We're going to speak to Clay Sell, CEO of X-Energy, on the work of his company, what they're doing at the forefront of this crucial change. That's coming up. This is Bloomberg. Welcome back. Amazon, Microsoft and Meta are among companies rushing to invest in nuclear power projects to meet the energy demands of data centers, surging, of course, due to the rapid growth of artificial intelligence. X-Energy has recently announced a $500 million financing round led by Amazon, but also Ken Griffin and Ares Management. The advanced nuclear reactor and fuel company is aiming to bring more than 5 gigawatts online. It's a big amount in the US by 2039. Very pleased to say I'm joined now by Clay Sell, the CEO of X-Energy, joining me on set. Clay, thanks for joining us on set, bright and early. So we'll talk about why you're in the UK, but let's start with the demand that you're seeing. What kind of forecast, what kind of modelling are you and the team doing around the energy demand into the future coming from data centres and AI?
You know, we've been engaged with the top data center operators in the United States for the last several years, and each of them are projecting tens and tens of gigawatts of additional power demand just for their requirements in the decades to come. And so it's going to really transform the way we think about power needs in the United States and ultimately around the world.
So tens and tens of gigawatts. You're looking, along with Amazon, and they've taken that stake in the business, to provide more than 5 gigawatts online, as we said, by 2039. How confident are you that you meet that target, and can you push above 5 gigawatts?
We can. We're confident we'll get the 5 gigawatts done in the next 15 years. That's only about half of what we project to sell over the next 15 years. And so we have an extraordinary opportunity to scale with Amazon.
The partnership with Amazon is clearly consequential for you and the wider industry, and you're seeing some of those hyperscalers really leaning into this. Are you seeing more private capital above and beyond mega cap tech moving into this space now, being pulled off the sidelines. There had been historically a bit of caution around a technology that was some had seen as largely unproven, untested. Is that private capital now being pulled into this sector?
The private capital is coming in. We're seeing it in the investment in our company X Energy, but we're also seeing it into investment into actual projects. Amazon led this round for us, where we raised over $500 million. But more importantly, they committed to invest capital in actual projects to build these machines and get them going. In the past, big data have said, we want to buy nuclear power if someone else builds it. Amazon said something very differently. We're going to invest in X Energy, but we're also going to invest in actual projects, facilitate the capital to get these projects built, up and running in the United States.
Do you see that as a model going forward?
I do.
Yeah. What about your relationship with Amazon then? Does that deepen going forward? Can we assume that you're going to build on that relationship? They're maybe going to build out a bigger stake in you guys going forward?
They've taken a strong position in our company. They've joined our board, and we are really collaborating with them on how we scale the sector to scale our business to build tens and tens of gigawatts in the next couple of decades.
And you haven't yet revealed what stake they've taken in the business. Are you prepared to do that today?
I won't make news on that today.
OK, but Amazon and X Energy, you have a long-term partnership and that could deepen going forward.
Absolutely.
Talk to us about whether the question mark seems to be, one of the question marks is whether the grid is match fit for this additional surge of energy. What investment is needed in the grid? How ready is the US grid, the grid here in the UK, to take on this additional need?
It's really one of the most attractive things about our nuclear technology. It's one that facilitates being sited alongside data centers. So in the past, where you're powering data centers with wind and solar that has to come from disparate parts of the country, that does require a massive build-out of the grid, new transmission lines to transport that power. But our technology, it's extraordinarily safe. It operates on a very small footprint, so it can actually be co-located next to industrial facilities, dramatically reducing the impact on the grid.
And that is the big change, isn't it, with this technology? So there was a report came out, Institute for Energy, Economics and Financial Analysis, back in May, and they said that SMRs, small modular reactors, are still too expensive, too slow and too risky. What are they getting wrong?
Well, the first ones will be difficult. The first project of any type is always more challenging. The key difference here is companies like Amazon and companies like Dow Chemical, both of whom are supporting our first projects, are looking beyond the first project. And small modular reactors, by definition, are a technology that can be built in a factory environment at scale, at volume, where you achieve the economies of volume. So, yeah, will the first projects be more expensive than people want? Perhaps. But they're looking forward to the 20th, the 30th, the 40th project, what the economics look like at scale, and that will truly transform the way the world thinks about clean, carbon-free, 24/7 power.
What do you say to the other critique, which is that this technology is drawing funds away from proven renewables?
Well, renewables are attractive. Amazon has invested in tens and tens of gigawatts of renewables. Renewables will continue to be an important part of the mix going forward. But they are not on 24 hours a day, 7 days a week. And industry requires firm 24/7 power. So renewables are great, but they don't give you everything that you need.
Clay, is the Trump administration, the incoming Trump administration, a catalyst for this industry or an impediment? He's had mixed views on renewables.
No, they're going to be a strong supporter. They were a very strong supporter of this industry and, quite frankly, our company in the previous term. And President Trump will be a strong supporter going forward, particularly in the regulatory reform area.
OK, Clay, thank you very much indeed for coming into the studio bright and early to talk about the energy needs, data centres, AI and what X Energy is doing to work towards that in the nuclear space with small modular reactors. Clay Sell, CEO of X Energy. Thank you. There's plenty more coming up. Stay with us. This is Bloomberg.
정치는 결국 궁극적으로 국민이 하게 되는데
Ultimately, politics is done by the people. And even if the result of the vote may go against the will of the people in the current situation, the vote result may change next time if individual members of the parliament are pressured heavily by public opinion. That's what I think.
That was South Korea's opposition leader Lee Jae-myung speaking with Bloomberg just a short time ago. And we've seen, of course, South Korean assets, equities under pressure once again. Here's what's happening with the currency over 3 days, down 0.6% versus the US dollar. We continue to monitor that, of course, because the uncertainty persists for the government of South Korea. Let's get you to some further uncertainty around the politics of France. Of course, the government has collapsed. Michel Barnier now is just a caretaker prime minister. Here's what's happened, of course. You had Marine Le Pen from the National Rally teaming up with the far left to vote in that no confidence motion and bring down the government. Michel Barnier then no longer the acting prime minister, a caretaker role for now. The ball is in Macron's court in terms of picking a new premier. How long that happens and what it means for the budget, of course, key questions going forward. Let's flip the board and have a look at a very different story when it comes to a reminder of the outperformance of the Mag 7. You had some strength coming through from tech yesterday. As a group then, year to date, up 63%. Nvidia had another very strong day yesterday. Nvidia, by the way, is up around 190% year to date. Meta also as well, just as one example, up 0.7%. In terms of the cash pile, by the way, of these Mag 7 companies, $100 billion of free cash flow just from Apple alone, minting that free cash flow just in the last 4 quarters. As a collective, the Mag 7, if you strip out Apple, an additional $280 billion in free cash flow. That is one key reason why it's very hard to stand in the way of the freight train that is the Mag 7 and the performance that you've seen year to date. Expectations from many, of course, that could continue into 2025. Let's flip the board and get on to Bitcoin. Breaking through that $100,000 mark for the first time on record. Up 4% in the session today at 101,000. Performance year to date, 130% year to date for Bitcoin. You've seen the market cap of all crypto increasing more than $1.3 trillion just since November the 5th, just since the election of incoming President Trump. The SEC pick, pro-crypto, that has been the latest catalyst, but you've seen money moving into those ETFs. You've seen expectations that maybe you even get a sovereign reserve of Bitcoin. The pro-crypto stance of this incoming Trump administration being reinforced by the SEC pick and now above 100,000 for the first time. Now, at 7:30 a.m. UK time on the opening trade, we're going to be speaking exclusively with the EU's new competition commissioner, Teresa Ribera. Do not miss that interview. The opening trade is up next. Stay with us. This is Bloomberg.